Well, quite the time to be alive if you're an investor in cryptos or even the stock market. We're seeing a lot of downside action, but none of this action should be any news to you if you've been following my channel. We were tracking the potential for our red downside pattern, and many coins had broken their supports, and they've been falling one by one like dominoes. And Litecoin is no exception. We had our support set at 91.55, and while we were bouncing a little bit, we definitely broke it. And well, again, this was totally expected. This support is based on our February 24th low. That was the low for this year up until within a few minutes ago. We actually have had most of the coins hit their lows on February 24th, and they've broken their supports. A handful hit their lows on January 22nd or 24th. Regardless, we're seeing follow through on a lot of coins. Even Bitcoin and Ethereum are getting closer and closer. Bitcoin even closer to breaking its support. So now that the big coins, the OGs, are starting to go down and break their supports, it's making it more clear that lower lows are in the forecast, and therefore we are falling red. As of our last update, we had our upside pattern up. That is obviously invalidated because we have pulled back below the origin point on February 24th. So again, in summary, that is how we got our support, and therefore we are following the red pattern. Ever since our high on March 30th, we've had a clean 5-wave pattern down. That's our wave 1. A nice standard looking wave 2. We got just about a 30.2% retrace. So that's about textbook standard. And well, we were a little hesitant to crash down through, but we're starting to move down. This could end up morphing into more of an ending diagonal kind of structure, because while our standard impulsive structure would have us go down to $70 or so just for the third wave alone, we're not going as fast in Litecoin as some of the other coins. So don't be surprised if the third wave only gets to about $75 and maybe the fifth wave truncates. It's a little early to tell. Let's see if we have more of a flush down, because this should be the strongest wave within this correction. So again, expect us to go down to $70. If we fall short, it might mean we have a bit more of a truncated bottom. You'd expect a sideways consolidation for our fourth wave, and then you have the ultimate bottom somewhere around $58, maybe as low as 51. So when we look at our MACD on the short-term chart, not much of a clue of what's going on. We're seeing a bit of a divergence. Could be a bottom, but I think it's a bit premature to consider that the bottom. However, this is what happens when you're going down. Usually when the sentiment shifts, it's very quick and swift. Sometimes we're in denial even once it's over. So stay on your toes. We're going to go a little bit more over how to approach what we're seeing momentarily. I'm going to shift to the big picture chart. So this is Litecoin. The only change that I have made on this chart is that red is now primary because we have broken support, as is the case in all the other coins, even the ones that have not yet broken support. I'm assuming that we are going red. We have the lower low in the forecast at the moment. You can see we had a very nice MACD divergence. While we've broken it to some extent with this latest pullback in the shorter term, longer term, it is still very much alive. So that's what you would like to see. Should continue to see the MACD stay relatively compact here while we have lower lows coming. How low? Well, I had a linear projection again, anywhere between $62 to $51. That more or less does align with this box. It falls right in this box, which was actually based on an equivalence. So you have your A wave and your B wave bounce. If you build a Fibonacci extension off of that, your 1-to-1 ratio falls around 76. So that would assume the C wave is as long as the A wave. That's the top of the box. As I mentioned, more likely we get a little bit lower down, maybe into the 60s range. So that is all fair range. Expect a low somewhere in the upper half of this box. Once it happens, once we get a spike down, the reversal should be very quick. And while the purple and green patterns are at the moment on the back burner, they're not fully dead, even though they've kind of invalidated. What I'm getting at is that once we bottom, we're still going to have a rally structure on the backside of this. So a lot of these targets may be mostly unchanged. You might lower them slightly, but you could get in at a lower price. Now, I have mentioned in almost all my previous updates that I did unload half my coins a little bit further back. Once we got the second wave bounce, we start going back down. I unloaded half my positions, but I fully intend to buy the dip once we get to a bottom. How do we know we're at the bottom? Well, we would be looking for some follow through. Let's see if we get that third wave down. Oftentimes it is a good idea to start buying on the third wave down because there's no guarantee that should get a lower low, or sometimes you have a truncated fifth wave where it doesn't go any lower, or it's even shallower. It doesn't go any deeper than the third wave did. So a lot of reasons why we do that. And plus the risk reward is definitely on the side of the bulls here if you want to buy, because there's only so much more you can fall. There's a lot more upside. More conservative investors, I understand if you want to see more of a confirmation. So when I say confirmation, we are looking for, well, let's assume we get down to $58. You would look to see a 5-wave impulsive rally up. And obviously, each of these upward waves within this impulse should also take 5-wave form. So if you look with a microscope, look with your 5-minute chart, 5-minute intervals, whatever, you should see an impulse within the first wave as well. That could be a good place for someone more aggressive to buy the dip. It is a little risky to buy it at the very bottom. I may be taking my chances because I kind of know how much I expect to lose, how risk tolerant I am. I'm kind of more of a high, more risk tolerant investor and trader myself. So I may be going in for the kill at the bottom. But again, for others, it may be better and easier and more confidence inspiring if you look for, again, 5-wave up and a 3-wave down. This is, again, what we call an Elliott wave 1-2 setup, in which we have a first wave and a second wave. This confirms once you have your second wave finish and you have a push through the top of the previous first wave. We do have some more quantitatively robust rules for that. So if you have your first wave up, second wave down, we have something called a pivot zone, which is the 0.618 to 0.764 extension. This is a key resistance. Once you get through that, that is generally seen as a confirmation that the third wave is underway and that you're safe to go along. So that's what we're looking at in all the coins, not just Litecoin. This applies to all the coins. So if you have other coins, keep your eye out. I did mention in some other updates that I used to use Dash as my primary indicator of sentiment because it's been generally, it moves quicker, it has better shape, more telltale. However, Ethereum Classic has been giving us much more clear, much quicker signs of reversals or anything like that. So take a look at the other coins too. You don't always know which ones are going to move first. In the case of this pullback, this latest pullback, we had Polygon, Shiba Inu, and Chainlink move first. So those are the first signs that we had lower lows coming. Those may provide us the first sign that we're going to see a reversal as well. In addition, final thing is that our stock market indices have been following very similar patterns. Again, in Elliott wave theory, we look at each asset class on its own, each coin on its own. However, the correlations have been hard to ignore. We're seeing the same kind of action. It looks like we're closing in on a bottom on the Dow at least, and the S&P 500. And well, our MACD is showing divergences. We've almost hit our box. We hit a low on February 23rd, 24th, just like with the cryptos. So don't be surprised if we see a slightly lower low, nominally lower low, maybe a double bottom. I think the S&P might be a little bit more clear in this case because we already have our lower low. So point is, we're getting close. Get ready to BTFD. Don't panic sell. That's my rule all this time. If you get stressed out, get anxiety, just pay less attention to the tickers. If I do see any major supports breaking, if there's anything that is jeopardizing our overall rally structure, you know you're going to have videos and updates, community posts coming your way. So subscribe so that you don't miss those and get your buying plans ready. It's going to be a very exciting week. Keep your eyes on the prize. Till next time, thank you for watching and happy trading.